want to go back to. In fact, we just got into the intraday high. We got over 10,206. It's dropped down a tick from there, but we are at intraday highs right now. Well, with gold hitting new heights, some individual investors are starting to take another look at the precious metal as an investment option. But
is it too late to jump on that bandwagon? Joining us now, our favorite gold bug, Peter Schiff, president of Euro Pacific Capital and author of Crash Proof 2.0. Peter, you were recommending gold back when it was in the 800, 700, 600. You've always liked gold. Go ahead.
Since I first been on television with you, I think in 2004, I've always recommended buying gold. Gold was in, I think, the 300 or 400s back then. I really started buying it for myself and my clients back in 1999 and 2000.
At what price?
Well, I started buying it at 270 or something like that. I mean, if people 10 years ago, if someone put $10,000 into gold, that's probably worth about $40,000 today. Whereas if somebody put $10,000 into the S&P 500, it's probably worth closer to $8,000. So gold continues to do well. And every time I come on television, people keep asking me, is it too late? Is it the top? I don't think we're anywhere near the top. As long as we continue to debase the money, as long as we keep stimulating the economy with printing money, the dollar is going to keep falling, gold is going to keep rising.
So where is the top, Peter?
I don't know. There's no necessary top because there's no low to the dollar. What gold simply tells you is what the U.S. dollar is worth or what other currencies are worth. It's a measure of purchasing power. So as the dollar loses value, you need more dollars to buy something like gold. Gold is not changing in value. It's the dollar that's losing value.
But give me a specific number. Do you think it's going to go up to 1,200 before the end of the year or something like that?
Oh, sure. Look, it's going to go to several thousand. My guess is at least 5,000 before it's over, but it could go a lot higher than that. It all depends on how long we wait before we get our act together and recognize that we're doing everything wrong right now.
Peter,
and that until we change course, gold's going up.
I don't necessarily think you're wrong, but let me play devil's advocate here. As you know, I always do with you. Where are the inflationary pressures that would support gold continuing to go higher? Because we don't really see them at the moment.
Well, if you don't see them, it's because you're not looking. I mean, where do you think all the money is coming from to finance the bailouts and the stimulus? It's coming from inflation. The government is printing it. They're creating that money. That is inflation.
You know that, but we haven't seen it play out as a solid story in numbers at the moment.
Well, it is playing out in the markets. Gold's not at 1,100 because people don't realize there's inflation. Commodity prices aren't rising. Oil prices aren't rising because there's no inflation. In fact, given the amount that our economy contracted, we had the biggest economic contraction since the Great Depression. Remember, during the Great Depression, prices fell by about 30%. Prices are still rising even with this massive contraction. That shows you how much inflation is in the system.
Peter, have you sold any of the gold that you bought at $300 or less?
No, I'm still buying. I'm buying more. I mean, when you earn money, what are you going to do with it? You have to put it someplace. You can't leave it in cash. And, you're talking about this carry trade. The carry trade where people are leveraging up and getting out of the dollar, that's a small part of this. The majority of people who are buying foreign stocks, who are buying precious metals, they're not leveraged. They're not carry traders. I've got almost 15,000 clients at Euro Pacific Capital. None of them are leveraged. They're buying foreign stocks and gold to get out of U.S. dollars to avoid this massive inflation tax so they don't have to get stuck holding the bag for all the bailouts and the stimulus.
Let's bring in Phil Flynn from the floor of the Chicago Mercantile Exchange. Phil, do you see spillover, and is it even fair to make this type of comparison to other precious metals, say, for example, platinum and silver isn't exactly precious, but, looking at those, what do you see as far as behavior is concerned?
Absolutely. Birds of a feather flock together when it comes to precious metals, and it definitely is having an impact. And it's not just gold, it's silver, but also the industrialized commodities. And if you look at this and you put it at a bigger picture, beyond the normal investors, and you put in countries like China and India and Russia and other countries, it's going to go beyond that. I mean, this dollar story is going to affect every commodity on the globe. It's going to transcend precious metals. It's happening in in oil. It's going to happen in grains. It's happening in all the commodities. It's even happening in the rare earth metals right now. So yes, I mean, what we're seeing here, as we lose confidence in the dollar, everybody is flocking to commodity as an asset class, as a alternative to the worst case scenarios. And Peter's right. I mean, listen, the bottom line is, if we ever get our act together, if the Fed starts raising interest rates, or at least shows some concern, you're going to see a massive correction in a big way. But that's a big if. And, based on what we saw in the G20 and what we've been hearing out of the Federal Reserve, that's just not happening.
But remember, we're nowhere near close to getting our act together, because getting our act together means understanding that the recession is necessary to cure the problems that our economy has.
If we keep Nicole to have a chance to speak. Nicole, I want to ask you about GLD, about some of the gold stocks, because if Peter is right, why are they not up in the stratosphere today? I'm looking at GLD, which has a rise of about 0.5% today. Why aren't more investors going into gold stocks?
There are a lot of gold stocks. I don't know too much about GLD in particular, but the gold, I was looking at the Amex Mining Index that's related to gold. All of those gold stocks are higher within that index. Many of the gold stocks are higher today. So I guess maybe that particular one you're looking at is not higher, but we're leaving out something.
GLD is not a gold stock. GLD is an ETF that owns physical gold. If you look at the indexes like the HUI, it's up big today. In fact, it made a new high for the year. But I agree. I think gold stocks should be a lot higher than they are.
Peter, Nicole was going to answer. Go ahead, Nicole.
I have a question for you. A lot of the traders I talk to and looking at the brokerage houses, I get a lot of the research notes. They are setting up for a stronger dollar coming into 2010. They are expecting the dollar to move higher. Where do commodities go from there? I mean,
they're going to be very disappointed.
And I think a lot of people are saying that gold is going higher, and that'd be great for everybody who owns gold and gold stocks. But there are a lot of folks who think that the dollar is going to turn around and gain strength, and that the other countries are not going to let the dollar drop.
Go ahead.
Yeah, well, I think if people are expecting a stronger dollar, they're probably going to be disappointed. Everything that we're doing is weakening the dollar, and the fundamentals for the U.S. economy are horrible. And everything that the government has done since this crisis began has actually worsened those fundamentals. We're in a much deeper hole than we were a year ago, and so the dollar is going to lose a lot of value. Even if we do the right thing, it's still going to lose a lot of value. But if we keep doing the wrong thing, it's going to lose most of its value, and it might even lose all of its value. And people have to understand that risk and that threat, and it is very, very real.
Hold on
and so people have to protect themselves from that.
Hold on a second, Peter. I can't let that last comment go. You say it's going to lose. How is it possible for the U.S. dollar to lose 100% of its purchasing power?
Well, remember, it has no intrinsic value. It's just a piece of paper. So it only has value to the extent that people have confidence in it. And if the confidence goes, the value goes. And what will lose confidence, if they keep printing them, if Ben Bernanke drops them out of helicopters, if we're trying to encourage Americans who are already broke to keep spending money they don't have, if the government's going to run these deficits to try to borrow and spend our way out of this recession, the dollars are going to have no value that they're printing because nobody is going to want them.
Okay.
When you saw the Bank of India, they just bought 100 metric tons of gold at over $1,000 an ounce. They're doing that for a reason.
Right.
Peter, other central banks are looking to buy gold.
We'll definitely have you back. I mean, Peter started recommending gold when we launched this network, and it was several $100 less than it is today. Great to see you, Peter. Thank you very much.
And thank you, Nicole and Phil.
And if you're going to have me on every time gold makes a new high, you're going to have to give me my own show.
They all want to play Hamlet, don't they?
Oh, yes. Your mother used to say that.
Denver budget problem.